All right. Hey, brother. Welcome to our podcast. I'm so glad to have you. For everyone who doesn't know, this is Min Nguyen. Is that how you say?
Min Win.
Min Nguyen. Okay. He has an amazing social media following. You're at over 100,000. I remember you were just under 100,000. So you've been growing substantial last few months. On IG. You also have a couple other accounts, and you're just growing across the world, man. So welcome.
Thank you, man. Thank you for having me.
Yeah, no problem, no problem. So I'm very excited. A few things that I want to get into in this discussion is I see you blowing up on social media. It seems like you're making moves in the lending world, and you're huge on analytics. I see that you're following all types of stats. And as realtors, especially when we get into the business, we don't know what the hell is going on. Like we don't know what an FHA is, we don't know what a conventional is. And I'd love if you could break down just kindergarten it for us, how to explain that, like what do realtors need to know, at least the basics, so that way we can explain it to our clients, or at least be a good knowledge broker. You know what I mean?
Yeah, I think the most important thing to learn or understand is supply and demand and inflation. So
Yeah.
as you guys know, as inflation picks up, so will mortgage rates. And inflation comes down, so will mortgage rates. So if I was a realtor today or a lender, I would pay attention to inflation and the job market. So the job market needs to crack. If the job market stays strong, that means inflation won't come down. Okay. If the job market is strong and inflation is low, different story. But if inflation is up, they're going to have to break the job market to bring inflation down. So that's what's going to take to bring interest rates down. So you just focus on those two things. If you want to see rates come down, focus on inflation and focus on the job market. So that's why I tell people to focus their energy on, so they can see here where rates going. And then the second thing I would focus my energy on is supply and demand. As we know, there's a limited amount of supply. The reason why people aren't buying up the world yet is because rates are up, but people aren't losing their home. So this is a temporary problem. That's why I talk to a lot of buyers. I'm like, hey, if you qualify to buy, I would go ahead and buy, because it's not like we're building more inventory. If we're not building more inventory, the only thing holding back your competition are rates. If you look at the Fed, which I think every realtor lender should check out, the Federal Reserve economic data. If you look at the Fed, you can tell. So March 2022, rates hit 5%. So in March 22, moving up forward, inventory picked up. Okay. If rates stayed low, inventory would be crushed. So as you can tell, inflation rates are really controlling the inventory right now, because if it was up to people and rates were lower, we would have no inventory right now. So that's what I think people need to focus their energy on is, look at supply and demand. If the problem we have right now is rates, if rates weren't the problem, demand would be diminished right now. Or not demand, sorry, supply would be diminished right now.
It really would. You're completely right about that. So as a new realtor, they need to know supply and demand. So essentially, what is the inventory going on right now? And I think it's important to understand, what is my single family inventory, what is my condo inventory, what's my townhome inventory, and maybe even look at new builds as well. I think that's a great stat there. And then looking at inflation versus sorry, you have said inflation and what else?
Job market.
And job market, yes, because as if the job market is doing super well, then typically they're not going to bring the rates
People
down.
spend money, and it's going to stop inflation from coming down.
Keep spending money. Yeah, you're absolutely right about that. So what is which I know I understand this, but I want you to say it. So what's a good inflation mark, so for everybody to like, hey, we want inflation to be at this level, so that way we see that the housing market is going to be doing well and buyers are going to have good opportunities.
So they are trying to get inflation back to 2%. Right now, inflation is at, I think, 6.4%. So it has to come down. It has to get down to 2. So that's why I know rates that you get today are temporary. If rates today were up and inflation was at 2%, you have nowhere to go. But if we're at 6% inflation and they're trying to get it to 2, that's all you know from where the benchmark where we are at right now in rates will eventually have to come down.
Yeah, you're absolutely right about that. It has to come down eventually. So I know we just had that dip in rates just a month ago, and I saw activity pick up so much. I'm here in Vegas, so I can only imagine what happened in Cali. Did you guys feel that hit? January had an amazing month because all the buyers were coming back into the market as soon as the new year was over. Taxes are starting to come out and the holidays are done. And
100%.
malls. So what did you guys see?
we had a good January. I was depressed in January. We only had a couple deals, and then we funded out pretty decent in January, February. We knocked it out of the park. March, we have everyone locked in, knocking it out of the park. I think April might slow it down, but they're saying, Barry Habib is saying, I'm not saying this, I'm not trying to claim it. Barry Habib is saying the job report is going to come in on March 10th. And March 10th jobs report, March 14th inflation, it should look a little bit better and rates should come down just a bit. But he's saying May 10th. I'm saying June or July, because I see that looking at the CPI report, the peak of housing inflation, which makes up right now 43% of all inflation, peaked in June and July. And that's when those old numbers from 2022 roll off, replacing it with the new 2023 numbers, we'll probably see lower inflation, which that's when we'll see probably rates come down.
Yeah, no, I think you're right about that, because I think he says May 10th, because I think that's when we're going to start seeing the decline. And then obviously June, July, those numbers start getting replaced on the CPI. So
the reason why I say June and July is June and July, it's when we saw rates hit when it jumped from the fives up into the mid to high sixes. It just skyrocketed during that time. And also during that time, that's when we went from a quarter rate hike to 50 basis points. We climbed a lot during those times.
Yeah, we were definitely on the Stairmaster
in
the summer of last year. Let me ask you the random question. Do the retail what is it? The wholesale price index, the retail price index, do those matter at all? Should we be following them or no?
I would just follow inflation. I would follow inflation and the job market, because those are only two things that matter. Yeah, there's other things you can look at, but inflation and job market is, I think, the easiest way to break it down. Other stuff, you're going to try to explain it to consumers. They don't care or they don't understand. If you're like, hey, if people have jobs, they're spending money. If they're spending money, inflation can't come down. Okay. So it sucks. They're going to have to make a bunch of people unemployed so they don't spend money. So if they don't spend money, then inflation can come down. When inflation comes down, but if the job market, unemployment, rises significantly high, the feds will pivot, back off on the rate hikes. On top of stopping rate hikes, if they back off on their hikes, that will make rates even get lower. Then I think we'll see rates in the mid fours. Without it, let's say the job market doesn't crash. They find a way to do a soft landing and they can get inflation to come down without the job markets coming down. We'll probably see rates in the lower fives. But if the job market cracks, we'll probably see fours. I don't think we'll see threes unless you do a buy down.
Yeah, you have to do a perm buy down, and you're probably gonna need to stay in that house for quite a while.
Correct.
It makes sense. Dang, what was I gonna ask you? Oh, so do you think for first-time home buyers, right, or the people that are entry-level buyers, should they be waiting till we hit 5.5% before they jump in, or do you think right now is a good time for them?
It all depends where you're buying real estate. Yeah. If right now rates are in the 6s and 7s and the housing market, there's no active listings, there's no price reductions, homes are getting to escrow quick, I would buy right now. But if, tons of listings are on the market, tons of price reductions, homes aren't going into pending sales quick, I would wait it out into the 5s. Why overpay when you don't have to? I would only overpay if it's a ghost town and there's not enough listings. Yeah. So all real estate is local. It all depends on where you're buying. I can tell you right now, if I was buying in Idaho, I would probably chill out. I'd probably wait it out.
Yeah.
Southern California, no. I know Goldman Sachs came out reporting that San Diego was going to crash. San Diego has multiple offers right now. If you listen to Goldman Sachs, you're going to be shopped out of the market when rates pull back.
You're going to be shopped out of the market if you listen to a majority of news outlets, because
correct,
they're just not in the game. They're not in the game. I'm curious. So obviously we have a supply issue right now. We also have a building issue because we have since 2010, 2.5 million homes didn't get built. So with 2.5 million homes not getting built, and also with the iBuyers, the big institutions buying up homes. I don't know if you saw the report. I was at a conference last year, and iBuyers made up 15% of all sales. How do you think that's going to impact the industry and the market?
I think iBuyer companies are cooling off right now. So Zillow, of course, is busted. Open Door just took another big L. So I think these iBuyers are going to calm down and cool off. And I think people are wising up. Open Door got a huge fat penalty for promising people they'd sell their house for more than they can, and they end up, getting popped for that. So I think iBuyers are going to fizzle away. They're not saying they're not going away because iBuyers are pretty much wholesalers, but the way they advertise, they're probably going to go away.
Yeah.
I think, I feel the feds are buying time for Wall Street to raise more money. And as prices come down, and as rates go up, prices come down, you can see these bigger companies can just, they're buying time to raise money, and they're able to step in at lower prices to buy cash.
Mm-hmm.
So that's why I don't think, like, if you're in a hot area, I probably wouldn't wait.
Yep. Yeah, because when rates start hitting 4.5, and obviously like the Zillows and the Opendoors, it seems like they're starting to chill out. But when you start having these big institutional buyers, the ones that are not named like that, maybe BlackRock and
Mhm.
those people, I feel like they're still going to make up a good percentage of the market, especially when as prices and rates come down. But we are seeing multiple offers here in Vegas too. I just beat somebody 7 offers, dude, on one house.
Wow, congrats.
I know, with an FHA loan. Who would have thought?
Yeah. Oh, the key thing right now, if you're gonna buy, go FHA. I wouldn't go conventional right now. With all the new rules and changes happening, you got a lower rate now, lower monthly PMI, lower rate right now. You're probably gonna end up refinancing again. So why go conventional? And then with the new LLP rule that changed in May, it's gonna, like, over 40% DTI. There's another adjustment that got added to the rate. So FHA is gonna be the way to go. If you can convince the seller to pay for the upfront PMI, it makes your life easier.
So what does that mean? Obviously, what does it mean for a seller to pay for upfront PMI?
So when you go buy a home FHA, there's a 1.75% upfront PMI that goes to FHA. So if the seller pays that off, you're positioning the buyer in a good position to refinance easier down the road, because that 1.75 will make it a little bit harder
Yeah.
because of closing costs and out of pocket. You're like actually paying forward for it.
Yeah, you're paying in advance. I love
Yeah.
that. And with FHA, obviously you can get that 6% in seller contribution.
Yeah. If it was me buying a home out in Las Vegas, when rates hit the fives, I would go FHA. I would do a permanent buy down. And because the PMI is so low already, like, dude, when the lower the interest rate, the more principal you attack.
Yep. Yep. I love it, man. And are you seeing a big difference in payment with the that's what we're talking about, from the 0.85 to the 0.55?
Yeah. And then if you go 5% down or more, it's 0.50. And with the new adjustments in May, conventions gonna be pricier even.
Wow. So for right now, definitely go FHA until you get to that 20% equity position, right?
Absolutely.
Very cool, very cool. So let's pivot a little bit. You've been doing, it seems like you've been doing social. I see you everywhere. How long you been in the game, or how did you even get into that?
I've been doing mortgages since 2003, and I got into social in 2017. I ran a big company with a bunch of LOs. I ran a successful business, but all my LOs were the rainmakers bringing in the business. Of course, when you're the rainmaker, you're always getting poached.
Yeah.
So when you're always getting poached, you're going to eventually leave. And if you're running a business, I'm tired of chasing loan officers. I'd rather be the rainmaker. So when everyone left me in 2017, instead of going out trying to find more loan officers, I decided I'd rather be the rainmaker myself. So, after seeing that Ty Lopez video about his Lamborghini, I learned that paid advertising was cheap back then. So in 2018, sold my house because I had to, because I lost everything. And then I went all in on social. I was probably one of the few people that was running money on ads. And, here we are.
And you crushed it, man. 100,000 plus, or across all platforms. How many followers do you have? Do you know?
I think I'm at almost 180. So
180.
I'm at 58,000 right now on TikTok, and I'm 126 or 127 on Instagram. And I got 10,000 on TikTok. I mean, on YouTube.
Wow. And that's just on the loan side, right? You also have a stock. I think you have a stocks one too as well.
That's my personal page that I just trade on. Sometimes like that one, I'm like back and forth. Sometimes like I'm just sharing stories of like how I'm making money. Like right now I'm day trading. I'm like, I'm trading something new right now and I'm making money. So I'm like, I'm just always evolving, just trying to better myself.
Yeah.
Especially I want to teach a trade to my son that doesn't involve if the market's up or down. So I teach him how to trade. He'll make money either way.
Wow. That's awesome. So what does your shirt mean? 5%?
5% versus 20% down. That's like the number one question in content, right? When you're making content, how can you explain 5% down versus 20% down? So people ask me, oh, what's 5% versus 20? Well, buy a house. A lot of people think they need 20% down. And by the time they save 20% down, they're either shopped out of the market or they're paying the same price as someone who bought 5% down 4 years ago.
Yeah, I love that, man. It's funny when I got into the business, I tried to explain this to people, and then that was back, years ago. And it's like, dude, like, why are you guys not taking advantage of these low down payment? Like right now, I have buyers who are walking into houses for free, essentially. Out
Yeah.
at the end of the day, at closing, they're walking in for free outside of a freaking inspection cost, appraisal cost. Like you're literally, this is the power of real estate, is you get to take control of a $400,000, $500,000 asset with next to nothing down. Like where else can you do that? And then
Yeah.
as it gains appreciation, you get to keep that. And as it gets paid down, you get to keep the equity too, as long as you're making your payments. Like there, I don't know too many asset classes that or assets that you can actually do that. It's crazy.
That's where all the money's in real estate.
All the money's in there, man.
Yeah.
Especially like veterans. Oh my God. Like I'm a former vet, I was in the Marines, and I try to tell all my veteran buddies, I'm like, dude, what are you guys doing, guys? We don't have a down payment. And I promise you, I'll get you closing costs. Like I can guarantee it at this point
Yeah.
now, especially with the market. Because I can get you a buy down and we can also get you closing costs. Because closing costs for VA is what, like 2%, or it's
Yeah, because they have non-allowables. That's why.
they have non-allowables, right? I can't even charge a transaction fee. So I pay for my TC out of my pocket. So yeah, man, it doesn't make any sense. So, anyways, 2017, you basically revamped, you became the rainmaker, and then you went all in on social. And what lessons did you learn during that time?
The lessons I learned during that time: build out a system, because you have to assume you're gonna be successful. When you run your social, if you think small, then you're going to do small things. If you think big, then you're going to do big things. So in the beginning, we burned through a lot of leads. I don't call them leads anymore. Sorry. I went through a lot of viewers because I just couldn't follow up with it, and when business started coming in, we didn't have a system. Now, when people reach out to us, they get text right away. They get calls, it's like this customer service, this journey is just amazing. But in the beginning, a lot of people were upset with me because I just didn't have a system. But the reason why I didn't have a system, because I didn't believe it was going to work. So you got to believe it's going to work, and you got to act as if. I'm not saying go out and spend money like you don't have money, like it's already there. I'm talking about act as if you have a successful business. Act as if you have a successful social.
Yeah, I love that. I love like acting as if you already had, because I was just talking about this with I think I was talking to my broker today actually, and I said, listen, I need you to help me audit my system, because I want it to be as if we had 200 people walk in the door today and we can do it flawlessly. I don't care about onboarding 2 or 3 people. I want to be able to handle 200 people at the same time. And if I have those systems in place, I know that we're going to be good to go.
Yeah.
So do you believe in building the system first and then doing the project, or do you believe doing the project, learning through the chaos, figuring out what is going wrong, and then adjusting to that? What do you believe in first?
Do all the free stuff or all the cheap stuff up front. If it costs money, I would take my sweet time.
Yeah. So
I think the most important thing is setting up automations on your CRM. You get it. Like if I had to start over as a real estate agent, I would probably go get Lines Desk, which is the cheapest, automate it. If I was a loan officer, I'd get this thing called MLO Shift. It has everything already built out. They're not the best systems. They're cheap, they're affordable, but it makes you look like a big brand.
Yeah, that's awesome. So do you think it's important to have do you have I'm assuming you have checklists set up, you have auto text set up. Like how do you work on your follow-up game there?
Yeah, we have a lot of automation, but we also have a concierge team. And then if people want to talk to me directly, it funnels over to me. So, besides talking to you typically from 12 to like 6 p.m. every 15 minutes, 30 minutes, I have a VIP call. So either someone that needs to talk to me that's never talked to me before, or someone who's in escrow that's kind of uneasy. They want to talk to me. They hear about me on the internet. They have seen me for so long and they follow me. So if they just need to hear like a couple minutes of, me talk, then it's good to
go. So you're right now in your role is the highest producing activity or your main activity that you want to do, because everything else is leveraged out, it seems, is I just have to talk to the consumer every 15 minutes. Is that kind of your game plan?
Correct. So from 12 or from 1 o'clock till 5 every 15 minutes, you know, more new people who come in, then probably if they're cool with us, then good. So if they don't need to talk to me, then they move forward with my loan officers. If they do need to talk to me, then they get 15 minutes.
That's beautiful. And how are you? I'm curious how. So I know that this is a big thing. How are you setting that expectation? Like, hey, you have 15 minutes. Whatever you need to talk about, here you go. Is there a form that says, hey, what do you need
Oh
to talk
no, well, sorry to cut you off there.
about?
That the loan officer or the concierge team has already prepped what they're going to talk about. So I let them talk first. Talking for 5 minutes uninterrupted, you can get a lot out. So I let them go, hey Richard, it's Minh, how you doing? Oh, thank you for calling me, Minh. I didn't think you'd really call me. I'm like, of course I would. Why wouldn't I? You're a big supporter of our channel.
Yeah.
I'm like, okay, cool. Well, do me a favor, Richard. Can you grab a pen and paper? I want you to draw like a T, and I want you to write pros and cons. Okay. First, here's my direct number. Don't give it out because I don't need a bunch of people calling me. Okay. But of course, at that point, they feel like my phone number is like, they feel like they're in this best kept secret. They get to know my number. We have a cloud number.
Yeah.
They get, but I do answer that phone. And then I write down, okay, so tell me your game plan. As they're telling me, I'll ask a question here and there to complete the 1003. And then, or the loan application, people don't know what a 1003 is. And then I ask them, okay, Richard, I only do business with people that keep promises. Can we keep promises together? Okay, let's pinky promise. So I get them to like engage with me. So if I let them talk for 5 minutes, I engage with them like a person. 15 minutes is really what all you need.
I love it, man. So, how are you keeping that full? Is it your Instagram ads? Like, how do you keep that pipeline full to where your day's booked every single day with conversations?
Oh, they set it in my Calendarly and it shoots directly to my phone. So I know like at that time I'm calling them. I'll send them a text right before. If they respond, I'll call. Rarely anyone doesn't respond because they set the appointment already.
Yeah, got you. So, but these are all people, and this is from the one pillar of social media, or is this like coming from
Also, all social. So all my business comes from social. Like Instagram is killing it for us.
Yeah.
TikTok is starting to pick up momentum. We're averaging about 3 to 5 live transfers from TikTok and about 35 from Instagram. So about 40 live transfers a day.
A day?
Yeah.
I was gonna say per week, per day.
Yeah, we're averaging like 40.
Jeez, bro.
So out of 40, I probably talked about 7 or 8
Okay.
every so, and then 7 or 8 because I also like talk to the ones that are, if they're on the fence, they're in escrow. So we balance out about like 15 to almost 20 calls a day.
Got you, bro. So you're crushing it. So you would say, from social, to you actually speaking with them, that's like a 20% conversion or 50? It's 20%, right?
So the getting on the phone is high. Our conversion rate, I think it's like 7 or 8%. I forgot exactly what it is.
Yeah.
Like my team would know more. They do more of the analytics,
That's awesome, man. That's huge, bro. So, how did you grow the social? Like, how did you get the momentum going? Did you have a coach? What did you have in place so you can get it going from,
Yeah. I just saw the internet and I just trial and error. I think coaches are amazing. I have a coach now, Lauren Taylor. She's my coach. But she's helping us read analytics, understand our analytics so we can find out what content works or doesn't work. Outside of that, I don't pay for other coaches. I don't believe in it because that money that goes to coaches, I don't want to throw out a name because I'm not here to talk smack, but a $10,000 coaching is like 3 months of ad spend for a new person. I'd rather spend $3,000 a month on my own ads, growing my brand, because imagine paying all this money to get dressed, but then you put all the money getting dressed nicely, but then when you go out, you have no money to spend.
Yeah.
And that's what I think when I see all these conferences and how much they cost. I'm like, that's less and less. I love these coaches. They eliminate my competition because they get these people to pay for their courses instead of paying for ads. Like I'm the only one I know that runs consistent ads because all these other guys are spending money on coaches and they're sucking their money dry.
Yeah, they don't have, well, because how they're breaking up the P&Ls and where you can actually allocate your money. There's a huge chunk for coaching versus how much you can actually spend versus marketing. And sometimes that coaching is more than your marketing.
Yeah. Oh, way more. When I see it, I'm like, dude, you go into another conference in Vegas. I'm like, there goes more competition. I'm like, keep going, player. You know what? You do you.
Yeah, go for it, man. Spend another 10, 15, 20, 30,000.
Hey, you're in Orange County too. Knock out 20 grand if you can.
Yeah. That's crazy, bro. Um, so trial and error, and then so you spend money on ads for your social media now. Nice.
Yes.
Okay,
Yes.
we can grow it. Okay, that makes
Well,
sense.
my,
So
my realtors and I, we both kind of go half and half.
yeah, that makes sense. Yeah, that's a no-brainer, dude. If I'm over there in OC, IE, San Diego, whatever, those areas, yeah, no-brainer. I'm definitely splitting the ad spend with you.
Yeah.
Wherever you want to go,
That or like they're giving me business. Like there's this one agent, we're courting her right now. She's a top agent in our area. We gave her 3
okay.
buys and a listing. There's no way I'm not getting in the door with her, you know?
Dude, you're definitely getting in the door
Yeah.
with her, especially she's probably doing what 100, 200 buy sides, especially she's a top
Yeah. So
there.
we gave her $1 million listing too. It wasn't even a boo-boo listing.
Yeah. Oh, that's a beautiful listing. So where are you actually in Cali?
I'm in Orange County. I'm in Southern California.
Oh, okay. Very cool. Very cool. So
Oh,
you're in OC. Yeah, I was just out there like 2 weeks ago.
yeah.
So I'd love to be in the OC market eventually. I'm starting to grow. I'm trying to grow out there. I just joined EXP and I have
Oh,
about 5
nice.
under me, and my whole upline is in California.
Dude,
So
Lauren Taylor's EXP, she has over 475 people in her downline.
does she 475? Yeah,
Yeah.
I'm hoping to be there probably within a year or two because I started off pretty quickly. Or do you know actually do you know Leo Robles out there?
I know Leo Robles.
Bro, that's one of my guys.
Oh,
That's
nice, nice, nice. Yeah, that guy's legit, man. He's big time.
dude, he's big. He has like close to 2,000 if he hasn't hit 2,000 already.
Damn.
Yeah. So yeah, I'm connected with him. I'm connected with a lot of EXP out there. So I'm excited, man. And then eventually I want to grow a sales team in that area. And because I love scripting and role playing and just building the relationships, that makes it easy for me. But
Nice.
I need to get into the social media game like at your level where I'm hitting a bunch of content and info and hooks. So if you were a realtor, would you be sharing? I don't know. Obviously, you can't quote rates. Like I know you say this every day. Hey, these are the rates. I can't quote them, but this is what they would be for today. Would you recommend a realtor to do that as well or no?
Uh, I probably wouldn't do that for realtor. I'd just be on top of the market on supply and demand. Like if I had to do real estate, um, if I had to do real estate right now, I would probably give real estate strategies that I don't see any real estate agent giving a real strategy. They're giving mortgage strategy. They're not mortgage people. They're real estate agents. They should do some mortgage strategy, but I would give things that buyers go through. It depends. Like my buddy Suman Kim, you can probably look him up. He's EXP out in Austin. He's been
Yeah.
doing real estate for 2 years. I think he's gonna hit $2 million this year.
In GCI?
Yeah. Look him
Holy
up.
crap.
He's at EXP Austin, Texas. He wasn't even on social media. He did social media. He's only been in the business 2 years. And he does YouTube. Yeah. So like he does the amazing home tours. He does all new construction. And it's like in a conveyor belt.
Yeah.
My close friend. So
What's his name?
Soo Min Kim.
How do you Sue S is it SU?
SOOMIN. You can look him up. He's on the Lions Den team. Whatever. Sherrod. He's on Sherrod's team.
Oh, okay, I see it. Oh, he's on Sherrod's team. Oh, very cool. Dang, look at him. He has 12,000 followers. Good for him.
Yeah.
Yeah. I'm gonna start copying all these guys, dude. I'm about to get all of
So
them going.
yeah, he does all YouTube. But the reason why he kills it, his video, his new construction tours beat out all the builders their own tours. So of course, when a builder has a new development, they
Yeah.
let him squat there and film everything he needs. He's not rushing filming and getting the F out. He squats. He does it so good that they market it. Hey, we have a new development. Come here and do your tour. And because of that, he kills it. And now he's getting referral. But dude, this guy doesn't know anything about real estate. Hopefully none of his followers watch this, but he don't know shit about real estate. He just knows how to do social market. He's
Yeah.
a marketing genius.
But he knows how to market and build relationships. And that's what real estate's
Yes.
about. I mean, at
Like,
the end of the day,
He'll call me and go, hey, man, are rates up or down? Just tell me right now. Tell me right now. And then he'll hang up the phone on me. I'm like, oh, thanks, bro. That's all good. I know he's busy.
That's funny, man. That's hilarious. So yeah, I mean, real estate is all about relationships. I mean, I would say probably 60, if not more, percent of the deals every single month are done by somebody who does 1 to 3 deals a year. And it's all because they have the relationship. So the relationships are the ones that are winning.
Think about he moved out to Texas with nobody, like just with family. He doesn't know anybody. It's an Asian guy in Texas, and he's killing it because of social.
Yeah, that's crazy. I'm definitely. I just shot him a follow, so I'm definitely gonna check out his content and see exactly what he's doing, man. Because I'm not like, yeah, I can get creative, but I'm not looking to recreate the wheel. Like, there's plenty of people who are crushing it out there. And
Mhm.
I'm just like, all right, who do I need to follow? What system do I need to have in place? And that's basically it. I keep it super simple. Um, what are they gonna get into? Hold on, I had another question here. Okay, so um, what actually, this is more for consumers. So, what types of loans do you specialize in? And what sets you apart from other lending institutions?
We broker, so we do just the vanilla loans, conventional FHA, VA. Of course, there's other programs we do, but our bread and butter is we're able to shop for a better deal and we can close fast. I think people who go through us, it's because of the education I provide them to have a smooth sailing. You know, our rates are reasonable. You know, there's some lenders that are doing it for working for free. Um, but like I say, our rates are reasonable. We just specialize in what we specialize in. So when someone reaches out to me and they're outside of that element, I refer them to someone else. And I think that's why buyers and sellers trust me, because I tell them what I would do myself or what I would tell my family member to do. So I give them the truth. It is what it is. And I also, with me, I'm always thinking outside the box. How do we maximize the best deal for them?
Yeah, yeah. Being solution based is super key, and then being truthful. I tell all my clients, I said, listen, like, we don't have to go buy a house today. I'm going to be in the business for the next 20 years. So if you want to buy today, great. If you want to buy in 3 years, great. Either way, I'm going to be here. And I think
Correct.
that's what helps me win as well. So I know we were talking prior. So you work at a broker. So you're a broker versus LO. Is that right?
Over bank, yes. We were a bank for a while, and I think when rates were super low back then, I think the banks can get away with like charging a lot. And even though when they charge a lot, the rate looks low. But I don't want to talk smack, but the company we were a part of, they went public. When they went public, the rates changed, and that's why we left.
Gotcha.
At the end of the
So
day, I got to be consumer first.
yeah, you gotta be consumer first. So what's the difference between a broker and an LO? Like,
Are you a broker in a bank? A
yeah,
broker, we wholesale loans, so we don't. It's like we're using someone else's credit card to do the whole transaction.
okay,
And then when you're a banker, you do the transaction yourself. And typically bankers, they have all these bosses on top of them. You got if you work for a mortgage bank, you got your branch manager, you got your office manager, you got to pay, you got the branch manager, you got the area manager, you got the West Coast manager if you're on the West Coast or East Coast. Then you got the regional. All those people got to eat. So you got all these executives who don't do anything all day, where you got to sell a higher rate to pay them all. That's why I don't like banking anymore.
yeah. So
Yeah,
it
way
basically
too
the
many
bottom of the
people.
pyramid, right?
Yeah, correct.
Yeah, and you can offer, so you can basically offer lower rates, and you can shop different banks to see which one's going to offer your client the best deal.
Correct.
I love it. I love it. So that's some good advice there. And I see a lot of actually lenders doing the same thing. Um, do you think refis are going to be coming back into the game in the next 12 months, or do you think that's gone for a
I
while?
hope it comes back. I think it'll come back this summer, but I'm hoping we wait it out a little longer. I need to squeeze out all these LOs. So 40% of LOs did not renew their license in 2023. So I'm trying to buy time, let them eat up all their savings and go out and get real jobs. So when refis come back, it's only me.
Wow.
I'll be honestly like, dude, delay that shit.
I get it, man.
Delay that shit. Don't come back till after summer.
Well,
Let it be a burning, like let people burn through their money, all their savings, get them all out. And of course, I'm hoping these conferences, more courses, more mentorship, squeeze out everyone's money, squeeze out their savings, get them all out.
yeah, man. I love it. So I didn't realize there's a 40% drop in. Well, I guess there was so many refi centric lenders that's why there's so many dropping. Because I know for realtors, I guess we were going to experience similar casualties. Here in Vegas is weird because we have so many part-timers because the strip, everybody's a server or a bartender, and they also are a realtor. So,
Crazy.
or they do some type of industry where they make cash. Not gonna say what it is, but they do some industry where they make cash every
Yeah.
day, and they're
They
also
only work from like 8 p.m. to 4 a.m. Yeah.
yeah. What do they call it? VIP hosts? I think not.
Yeah.
So
Atmosphere people.
Yeah, that's it. They're trying to do they're morale boosters. I think that's what they're called. So what advice do you have for an individual that's seeking loans, and what can borrowers do to improve their chances of getting approved for a loan?
I recommend every borrower reach out to a lender, do something called a soft mortgage credit pull. It doesn't affect your credit score, so you can gauge and see where you're at, so you can make adjustments before you're ready to buy.
Gotcha. Very, very great answer.
And then last but not least, get on a real estate agent home search so you can see the budget matching the house. Because if it doesn't, then you want to make some big adjustments where you might have to move, change careers, or home ownership might not be for you. And you need to figure out how to use the difference of the money to build your wealth if home ownership is not in your future.
Yeah, I agree with that. So what what inspired you to actually be a lender? I know I don't think we talked about this yet. So did you become a lender right out of high school, or maybe what did you do?
2003, when I figured out how much money people made, how
Ah,
much money loan officers made. Not truth. I'm not gonna, I'm not gonna BS you. Like, go to college, you get your master's, or you even get your PhD. You make less than a loan officer without a college degree. With the loan officer though, you just need years of experience under your belt and know how to save and preserve your money instead of spending it all. Then you'll be fine.
yeah. And so would you, as a newer lender, do you recommend going into like that W-2 role where you have all these people above you to kind of teach you? Like, would you just go find the best lender? Who would you work for if you started over? What would you do?
If it was me, I'd go work for a W-2 company first, so you can get experience under your belt. So you just understand, live at home, get minimal bills, learn as much as you can. And once you learn enough, build some savings, then I would go out and broker and try to, you know, generate your own book of business.
So what is a good book of business that you think? I guess everybody's different, but I guess in California, how many what size book of business do you think you need to have for you to be able to walk on your own 2 feet?
If I worked in California, in Southern California, I would probably go work for a bank, US Bank. I would go work for US Bank. Their bread and butter is jumbo and arms. Southern California, you're going to run into high balance jumbo and arms. That's why I'd go to the bank. If
Mm,
you're outside of California, I'd probably broker. And
mm,
if you're brokering, you only need to close like 2 deals a month.
yeah, it's pretty good.
Yeah.
So very cool. What habits do you think like personally that you utilize that allow you to be so successful to be who you are? Like what do you do daily or weekly, monthly? Like what's your top habits?
Always keep learning. You're never above, you're never too old to learn. I think in 2017, I was funding 68 million. I used to make 75 basis points. So do the math on 68 million. So I stopped learning. I thought I was above the laws, like I thought I can catch bullets, walk on water, and I stopped learning. And then, it came up on me in 2017. I lost everything. So
Mhm.
now it's like I'm up at like 4:45. I day trade to like 11. As I'm day trading, I'm reading articles all day long, making sure that if something new hits the street, I'm the first to know. If I don't, I have some underwriters I pay on the side of my back pocket to feed me guidelines all day. So I'm paying people to feed me guidelines. I have someone feed me like what's going on in the economy. I actually pay a college, not actually, he used to be a college student. I pay this, he's a day trader now, but he trades based on fundamentals. So he trades based on news. So he taught me how to read, the JOLTS report. He taught me how to read PCI, how to, I'm paying people to pour knowledge into me so that, when Barry Habib retires, I'm right there.
You do believe in coaches, no?
Well, I'm paying people to feed me
Analyst.
knowledge, not
Yeah,
to be my cheerleader. Like,
I know.
be aggressive, be aggressive. I know how to be aggressive. I'm paying people to teach me something valuable, not motivate me to like work.
Yeah, yeah, that's important information there. What type of, I guess, going into that a little bit deeper, what type of articles do you think if they can't pay somebody to do it, like whether get an intern, what type of articles should they be following?
All you got to do is follow all the articles that Housing Wire puts out. Housing Wire will tell you where they got the data from. Start following all those data sources. These writers for Housing Wire, they're not economists. They're just digging, except for Logan, they're digging through other articles, and that's where they're getting it. Once you start reading the articles and they, notate where the article came from, then you start stacking all those blogs on your page, and every day you circulate through them. So every day I go from top to bottom. There's about 20 of them, top to bottom. And I dig. And eventually you start sorting out the ones that you want. Like, to me, I love Black Knight, Atom Data, and CoreLogic because they provide foreclosure data. They also provide how many people got mortgages. They provide equity. And I trust them because their goal is to sell foreclosure data. So if they don't like giving bad news saying that there's no foreclosures because they're not making money. So, I use data companies a lot. I use NAR. I use Housing Wire. I use the Real Deal. I use, like I said, I comb through them and then I rotate, and that's how I get my information. And then of course my buddy, showed me how to use the FRED, the Federal Reserve Economic Data, look for new construction, look for active listings. I use that active listings all the time to prove to people, right? Right now, I think after February, we have under 600,000 active listings. And if rates stay above 6.5, which it is, we'll probably see active listings pick up, but I'm already on top of that.
Yeah, though that's a great format for any agent who's like, hey, how do I stay on top? How do I be the knowledge broker? So I love everything you just shared there. I know we're getting short. I wanted to get into this before we went anywhere. AI. How are you leveraging AI, or have you even touched it?
Yeah,
I'm sure you have.
So we used it as a joke. I don't think you can play that. I don't really care. We use ChatGPT, say something sexy, right? Or like, it was like, hey, be a phone sex operator, just
yeah.
Or give me a welcome letter to sell your home, but with a Western twang. Dude, it does it, dude. It's big time. So I think for people to it's gonna help a lot of people, That's why I think I have to stay so ahead, because I'm sure with AI they have to grab data from the internet, right? And that's how they formulate all their information, like data points. So when something drops, I got to be the first to drop it before it can figure it out. Like May 1st, the new LLPA rules are going to change. They haven't figured that out yet because I've tested it already on ChatGPT. I'm like, tell me this. If they don't know it, like, boom, let me talk about it. By the time they know it, everyone and their mom knows it.
Yep. Because I think eventually once it upgrades to the 4th or 5th version, then it'll be real time. Because I know the one right now that's only going till 2021. I think that's what it's dated till. So that's why you're not seeing like current information hit it too often.
Oh, it's pretty current, but not that current. But it's pretty current. Like, pretty blown away at it.
Yeah, I think it's 2021 is what they said. So eventually it's gonna be like, hey, ChatGPT, right? Tell me the top 20 articles that happen in A, B, C, subjects, and break it down into a 5-paragraph summary, like whatever. And now you're not going to Housing Wire, you're not going to Fred. It's already scoured the internet and got all this information for you. Like,
yeah, but those pages still have articles. That's the one thing that's gonna be different.
Yeah,
bro. There's a new one.
Okay, go for it.
And once they scan your face, you can look to the side and read the script, but it's like it's looking directly at the camera. The mouth is moving, and you're delivering the message. So you can read it, put your over and over again, give your inflection points, and as you look in the camera, even though you're looking this way, it's like you're looking this way talking.
What?
Dude, that is like that's
effing
gangster of like AI.
I forgot what that one's called. Like, I've seen it in videos, but I haven't done enough research for it. But I definitely want to get that one, so that way, as I'm starting to put out more videos, I can just, hey, this is what I want to say. This is what I want to say. I heard this one. Maybe that's the same one. Is that the one where you just have to speak to it for however long, and then eventually it can pick up everything you're saying?
It scans your face, and it just keeps your face like this while you're talking.
Yeah.
Like, I can read the paragraph out loud, but the only thing is you still have to move your hands, because so far they got your face, as long as you have your inflection points correctly. Man. So like right now I'm getting coaching on body language. So on how to keep my body language, my hands moving, so that when I deliver a message, I'm like pulling people in,
That's huge, brother.
That's the type of coaching you should get, not motivation.
Well, I think AI is I think that's definitely the next. I feel like this is the next revolution. Is we need to learn, especially the people who are not getting out of the business and retiring, like those who are going to be in the next 10, 15, 20 years. We have to learn how to use and leverage AI into our business. Because I just did 40 pieces of content in 2 minutes. I just dropped a YouTube video on it using ChatGPT and Canva. Like, it's crazy.
Nice.
And eventually we'll be able to do that, but with video. Like that's going to be huge. So I'm still learning about it, man. Ask me in a year where I'm at, and I guarantee I'm going to be all ahead of it because there's a lot of people like, oh, it's a robot, blah blah blah. I'm like, dude, you need to
That's
relax.
why I think social is gonna, since since you're doing that, a lot of people are social after the next year, 2 years. You gotta be the brand. You are the niche. So you have to find a way to give out information. That's why I don't know if you noticed in my other videos, I'm going over buyer scenarios more what's going on in my life, because you have to build trust with them falling in love with you, because everyone's just flooding mortgage knowledge now, real estate knowledge. I think it's going to be more vlog style after the next year. After next year, I think it'll be 90% vlog. But that means you got to keep your vlog has got to be like giving something educational while you're letting people fall in love with your personality.
Yeah, I like that tip. I like that because that's what's going to separate you because everybody's going to, I mean, it's not a secret. The information, the education, everything is out there. You don't need to pay somebody to teach you what you need to learn because it's all out there, right? It's just, are you going to apply it or not? So that being said, for us to wrap up, do you read books?
Yes, I do.
What are you reading now?
Right now, I am reading 2 day trading books right now.
2 day trading.
Yes,
Okay.
I'm reading a day trading book right now. His name is I think Phil Miller, and it's pretty much on supply and demand and the Fibonacci. And he has 3 books out. So I just finished a supply and demand book. So there's supply and demand, there's the Fibonacci, and then there's trading reverses. Those are the 3 books I'm reading right now. So I'm all about trading right now. I feel like I'm at a place where I want to learn a craft to teach this to my son. And I think next year, and where millennials are heading, I think everyone wants to learn quick money on how to make money without working hard. And if I can make money day trading consistently without working hard, I'm going to win over a huge audience of generation Y and Z, or whatever, alpha, whatever's next.
I was like, are we in Y? I don't even know.
Yeah. So if I can learn how to make a couple $1,000 or $1,000 a day, $2,000 a day within minutes, I'm going to win over the audience who's going to want to do that. And then I can share after I trade how I do mortgages and different things like that. And I really believe that for me, that's the future. I think as soon as I get my blue check, hopefully I get my blue check soon, I will probably talk about more day trading, because right now, if I talk about it, I have all these bossy scammers out there. But as soon as I have my blue check, probably will, go away. And then that's when I will really share, what I'm doing. And that's why I think I have a lot of realtors and lenders who are following me right now on my other page, because rates are up. They're not putting a lot of people in escrow and they're making money day trading. And I feel like my next step is to win over the audience who I can make it so easy for them to make money that eventually they'll get their home and their loan. Dude, I've gotten so many loans and leads through my personal page because I talk about day trading.
Wow. Okay, so day trading. That's huge. I have not jumped into it because I know how I am. If I go into that, I'm gonna be completely distracted. I already know.
Yeah.
So how do you stay disciplined and only do it for 4 hours a day?
I got time. I got time. Yeah, I got time to like. I feel like if I get to it before everyone, like I got to social before like a lot of people, not before everybody.
Yeah.
But I was disciplined in it for like 10 months, where I was putting out 2 pieces of content a day. I was doing Facebook Live twice a week for an hour. I was posting twice a day, 7 days a week for 10 months without one deal. Right. And everyone on top of that, now everyone's rooting you on to do social, Richard. When I was doing it, people thought I was crazy. They thought I was egotistical, or like, this guy's lost his shit.
Yeah.
And, but I was the first. So now I feel like if I'm the first of this, I'll be ahead of everybody again.
Yeah, that's a great perspective, and I think you're gonna definitely crush it just because you have the right mindset, man. You're gonna destroy it. So, last question I ask everybody: what is your theme of the first quarter? What's a quote that you're living by? What do you got?
Be patient. If someone else can do it, you can too.
I love it,
If
man.
someone else made money doing it, why can't you? You got to be, I don't like to say these words, but it's like my friends always mess with me. He's like, hey, is your wife a Mexican or Mexican? Because something like, because she lives a good life,
Yeah.
does she still work or does she not work? Like, she's a Mexican because she makes everything possible. So you got to be a can person, not a can't person. When you see an objective or you see like someone else is doing it, you gotta think, how can I do it? Not like, well, come up with every excuse why you can't do it.
Yeah. That's
I
very,
learned that. I didn't know what that meant until someone taught me that. So
I
I'm like,
think
I can't say that, but I'm a can person. When I see something pop up, like, okay, all right, if they say it, that means it's possible. How can I do it? What do I need to do to what do I need to sacrifice to get there?
yeah. And I think if you can get in the room with people who are already doing it, or if you can at least get within proximity, like that makes a huge difference. Just seeing somebody do it is one thing, but if you can get in the room, be in conversation with people who are doing it, man, like your reality, it just becomes so much more can and able. Like that's what I truly believe. It's like, well, anybody can do whatever they want, right? But if we're in the room with people who definitely are doing it and can do it, you can do it as well. So I
Correct,
love it,
100%.
man. So I'll wrap it up, man. And until next time, I appreciate you coming on here, and we'll see you next time. Okay.
Thank you.
Thank you, brother.